Good afternoon, everyone. Welcome to this insightful webinar on navigating EPR compliances for used oil. So thank you so much to all of you for joining us in on time. And it is really great to see so many of you joining in for the webinar as you all are looking for some guidance on the used oil EPR since it is a little complex. There are many things, and with annual return filing coming in and some new updates coming in, it becomes more and more complex and very important for all the organization to follow the compliances. So allow me to introduce you to our organization, A A Garg Co, which is called A to G by a lot many people. So we are a management consulting firm and subject matter experts under the domain of circularity and sustainability. We specialize in the domain of extended producer responsibility, environmental, social, and governance, corporate finance and business operations, and tech-enabled solutions. Now, our greatest asset is our people, a team of sustainability specialists, environmental engineers, MBAs, chartered accountants, technical experts, and senior partners who collaborate seamlessly to tailor every engagement to your unique objectives. At A2G, we are passionately committed to delivering value-added services that not only meet your goals, but also leave a lasting positive imprint. So today we have a panel of distinguished experts, each bringing a unique blend of technical mastery, regulatory insight, and hands-on experience in EPR and sustainability advisory. Now, our first speaker today is Mr. Abhishek Garg. He's a chartered accountant and the founder of A A Garg Co. and a thought leader in the field of environmental compliances and sustainability. With over 15 years of experience in EPR compliances and sustainability advisory, Mr. Garg has been a trusted partner for organizations striving to meet India's evolving environmental regulations. He has played a pivotal role in helping companies navigate the complexities of EPR frameworks, design effective compliance strategies, and embed sustainability into their core operations. Under his leadership, A A Garg Co. has guided numerous corporations in building a robust sustainability frameworks that not only ensure compliance, but also deliver tangible environmental impact. Next up, we have Ms. Ipsita Roy, Senior Manager at A A Garg Co. With an academic background in life sciences and environmental science, Ms. Roy brings deep subject matter expertise in EPR regulations and waste management practices. Over the years, she has played a pivotal role in educating and guiding corporates on environmental responsibility, particularly across key sectors such as plastic packaging, e-waste, battery waste, and other operational EPR streams. Her work has been instrumental in helping organizations understand, adopt, and implement best practice in sustainability, driving both regulatory compliance and long-term environmental impact. Next speaker, we have Ms. Pooja Mali. She's an executive consultant at A2G. And with over 2.5 years of experience in EPR consulting, Pooja has worked extensively across multiple waste streams, including plastic waste, e-waste, battery waste, and used oil. She brings a strong foundation in EPR advisory, sustainability audits, and data-driven reporting, supporting organizations in achieving regulatory compliances and advancing their sustainability goal. Pooja's key strengths lie in stakeholder management, in developing value-driven sustainability strategies that bridge the gap between compliance and impact. And of course, I, Arushi Thakur, will be your session moderator and I will help you navigate through the webinar. So we'll go through some webinar rules before we start the webinar. So this meeting will be recorded. Only the discussions would be recorded without attributing to the speakers. And we kindly request restrictions from spamming or marketing during the session, which is why the chat box will remain disabled. And the Q&A session will be taken up in the last. You can enter all your queries related to the EPR used oil in the Q&A section. And towards the end, the experts will address them accordingly. And in view of time limitations, we would request all to avoid repetitive questions. Kindly restrict the discussion to the mentioned topic only, which is, of course, EPR for used oil. and the recording of the webinar will be available on our YouTube channel. So in case you missed anything, you can revisit the webinar recording as per your convenience. Now, I would like to welcome all the joinees again to the webinar on navigating EPR compliances for used oil. Thank you for joining us. And now we will be starting our session. So today's webinar agenda is overview of the used oil EPR under hazardous waste management rules, producers' obligations, plan of action for used oil management, and towards the end, interactive Q&A session. So now, since we have covered all of the introductory part of the webinar and a lot of people have joined in, so I think this is a good time to start the webinar. So I would like to invite our first speaker, Ms. Ipsita Roy, to start the webinar and help you understand the EPR compliances. Over to you, Ipsita.
Thank you so much, Arushi, for introducing us. So, thank you so much, everyone, for joining in today and supporting us as we take the capability building sessions forward. Let me first of all take you through the journey of EPR in India and how it has evolved across various waste streams in India. EPR, first of all, stands for Extended Producers Responsibility, which is a strategy framework specially developed for producers, making them responsible for the waste that they are generating, maybe in the form of product or packaging, and involving a recycling structure which is environmentally sound in nature. The entire principle or the entire framework is based on a principle which is known as polluters pay principle. This framework is applicable to various stakeholders such as manufacturers, producers, importers, brand owners, suppliers, bulk consumers, e-retailers, etc. Now you can see that there are various waste streams in India that are obligated. For the active EPR frameworks that are functioning are across e-waste, battery waste, plastic packaging waste, used oil, waste tire, and end-of-life vehicle. And there are upcoming regulations as well, which are for construction and demolition waste, scrap of non-ferrous metals, and EPR for other packaging, which are made up of paper, metal, and glass, and sanitary products as well. Salient features which are found across the various waste streams in India or the various EPR frameworks. First of all, no business is allowed without the proper registration and proper compliance structure being followed by any and every entity who is obligated. The imports without registration are also restricted, and every entity is guided to not deal with any of the unregistered suppliers and customers. Other important compliances which are mandatory in nature are one-time registration. There are quarterly or annual filings which are included based on what kind of EPR framework one is following. EPR target fulfillment is a very important part. There are compliances for marking and labeling, awareness of particular waste in the EPR framework, and restriction on substances or thickness, depending. There are additional obligations which start from circularity compliances for reuse, use of recycled content or recycled material, and reducing, refurbishing, improve the product life or or quality controls, training and awareness, evolving regulations, and dialogue with regulators is a very important part. Then there are actions and penalties in case of any of the non-compliances for which guidelines are coming up which are being released by the regulatory authority CPCB or the Central Pollution Control Board, which is known as the environmental compensation. There are actions on contraventions that are being released under the regulations. There are other penalties on various non-compliances, and non-compliant entities data is to be reported publicly by CPCB. That is also very much regulated under the rules, and operational disruptions are also involved. So today we are going to talk about the used oil compliances. First of all, I'll give you the overview of how the compliances are developed or have been. What is the journey of the used oil EPR in India? Used oil was earlier involved in the was covered under the hazardous waste management rules, and there wasn't any particular EPR regulation for this. However, in 2023, we saw the introduction of EPR framework for used oil management. It started with 5% EPR target from FY 24-25 for the sale of the used oil that was done in FY 2022-23 based on the average life of 2 years. There were various obligated entities that were introduced, such as producer, used oil importer, collection agent, and the recyclers. In 2024, the first amendment was released by MOFCC, wherein we saw the highest and lowest price for exchange of EPR certificates, and also the clause for relaxation of timelines for annual return filing was also introduced. Also, in 2024, CPCB released the EPR portal for used oil management, and guidance document was released for producer registration, which saw the journey for producers to start registering on the portal. In 2025, the draft guidance document for environmental compensation was released by CPCB, and certain other guidance documents that are for collection agents for managing the used oil, for recyclers and co-processors for starting their registration, for used oil importer to start the registration, for EPR target generation and transfer for the recyclers and co-processors. EPR target adjustment was also introduced in the producers portal. And thereafter, we also saw the annual return started and the timelines were extended till 30th of September for FY 24-25. So let me take you through the overview of the rules now. There are 4 kinds of obligated entities, as I have said. It's producer, collection agents, recycler, and used oil importer. All the entities have to do the registration on the EPR portal, which is developed by CPCB, and they are not allowed to do the business without registration. In order to issue the certificates, the recyclers also need to mandatorily register on the portal. In case any entity is covered in more than one category, then under the same they have to do the registrations under the different categories. There are 16 kinds of obligated oils. As you can see the list here, starting from virgin base, white oil, hydraulic oil, transformer oil, cutting oil, rubber processing oil, and the range keeps on going. 2 types of recycling are identified under the regulations. First is producer re-refined based oil or lubrication oil, and second is energy recovery. The EPR targets further started, the range, the EPR obligation started from 5% since FY 24-25, which was based on the total used oil sold or imported in FY 22-23. Now you can see the range how it increases to 2025-26. 10% of the EPR obligation was stated. In FY 26 to 28, we can see an increase of 20%. From 28 to 30, we can see an increase of 40%. And 2030-31 onwards, 50% of the total obligation would be done based on the sale or import of the used oil. Targets are calculated based on 2 years of average life of the used oil. And for imported used oil, there is 100% target. Waste oil recycling target is in tons, and fulfillment of the EPR obligation is by purchasing the EPR certificates directly from the CPCB portal. Now, we have also spoken about our EPR ETP portal in the previous webinar. Please do refer the previous webinar to understand the procedure in detail. Coming to the regulatory implementation, online registration is a must for all the stakeholders. Import of used oil is permitted for the purpose of re-refining only. EPR fulfillment. So fulfillment of the EPR obligation is must. Then providing contact details for consumers through website, advertisements and documentation, which is a general awareness for the used oil management, how it should be done by the producers, is mandatory. Annual returns filing should be on or before 30th of June every year by all the stakeholders. However, we can also see that for collection agents and for the recyclers, the quarterly reporting is also there. EPR certificate validity will be for 2 years. Limit on producers to purchase the EPR certificate. Details of those will be also explained in the upcoming slides. Then we have environmental compensation. A draft version of draft guidelines of the same is released. And yes, processing with the annual and quarterly filings. Let me take you now through the producer definition and responsibilities. Producer is any entity or person who is manufacturing and selling the base oil or lubrication oil domestically under its own brand, or offers to sell the lubrication oil domestically under its own brand using the base oil manufactured by other manufacturers or suppliers, or offers to sell the imported base oil or lubrication oil domestically. Now, the sale method or the selling technique is irrespective. It can be used as, by a dealer, retailer, e-retailer, anyone. Moving on to the responsibilities. The responsibilities of a producer first one is to register itself. Second is to fulfill the EPR targets. In case, for how the EPR obligation should be fulfilled, the producers also need to maintain a plan of action, and such plan of action can be developed by 2 or more producers as well. Awareness through websites, through advertisements, through documentations, any and everything is mandatory for the producers. Producers also have to file the annual returns, and yes, awareness could be anyhow. Moving on, I am taking you through one of the very important update that was released recently in August this year. This guidance document was released by CPCB, and it spoke about the EPR target adjustment module for the registered producers and at the used oil portal. Now, the guidance document supports in streaming EPR target adjustment for producers and covers 2 types of adjustments. First one being the operational loss adjustments, and second one being the B2B operational transfers. Benefits for both the sender producer and the receiver producer are mentioned. The module helps in streamlining the EPR target adjustments by preventing duplication of obligations when oil is transferred between the registered producers. There is a very thin line between how the targets can be adjusted and transferred from one producer to other. We see that there are a lot of operational challenges between the used oil industry and how one producer or one manufacturer is selling the used oil to the other producer or the brand. And a lot of confusion was arising in between that who should take the target. So with the introduction of this particular guidance document, it is very easy to understand that who actually would be taking up the target. This would depend upon the quantity that is sold. This would also depend upon the sales record and the percentage share in case of a co-branded used oil. So yes, adjustments can be made annually for each of the financial year based on the sales data that is submitted. Now, the procedure is very simple and will be explained further thoroughly. However, just to give a gist about it, that how it works is there is a sender producer and a receiver producer. Both should be registered on the EPR portal. When the everyone is updating its own procurement oil and the sale oil details on the portal. The sender producer should initiate the adjustment request based on FY, based on the type of oil, based on the registration ID of the receiver producer. And once the request is sent, the receiver producer on receiving it should tally all the details and accept the request. Um, the request could also be rejected in case there is any mismatch of the details, and there will only be one single chance given for amendment of such requests, and the targets would be adjusted accordingly on the portal. Coming to the environmental compensation guidelines which were released by CPCB, this is a draft guideline as of now, and was released this year around July. And EC to be levied is on all the stakeholders, which are producers, used oil importers, collection agents, bulk generators, and the recyclers. There are two kinds of regimes that focus on different kinds of non-compliances. The first regime, or the EC regime 1, it is applicable to obligated entities when they fail to meet the EPR targets. The EC charge depends upon the maximum and the minimum price, which is based on 100% and 30% as per the regulations. The maximum price is rupees 18 per litre or 20 per kg. And the minimum price based on 30% is 5.4 rupees per litre or 6 rupees per kg. The approximate density is also mentioned for used oil is 0.9 kg per litre. This is computed based on this particular density approximation. The second EC regime is applicable in case of any other kind of non-compliances which are noticed as per the EPR regulations. It could be by the producers or recyclers, it could be by the collection agents, bulk generators, or based on any of the operations such as sales, storage, handling of the used oil. Any non-compliances could be there. So the EC depends upon, it is varying as per the default. The first default would attract an EC to producers and recyclers. It could attract an EC of 25,000 rupees, ranging to 50,000 in case of second default and 1 lakh in case of third default. And in case of a collection agent and bulk generator, the first default price would be 5,000. Second, moving on to, there's some mistake over here, but 1,000 and then 2,000. EC for informal illegal sale or storage, transformation, recycling, processing of used oil by the non-registered entity, person or shop. It is standard, which is 25,000 rupees plus the quantity of used oil in liters into rupees 18 per liter of the seized used oil. So these are the environmental compensation guidelines. Moving on to the next slide. Yeah, that was my part. Thank you.
Thank you, Ipsita. Thank you for covering the basics of the used oil and giving us the overview with all the obligated entities and what are the targets, how those targets will be calculated, and the draft environmental compensation, which is a very important document since that will be deciding if you default. So how much will you will you be required to pay? So now I will invite our next speaker, Ms. Pooja Mali, to take over the webinar and help you understand the producer obligation and the entire registration process for the producers and all the requirements that producers should keep in mind while they are registering and doing all the compliances. So over to you, Pooja.
Thank you, Arushi, for introducing me. So I'll take you ahead with the practical reporting onto the portal. So wherein we are firstly supposed to register ourselves. Once the registration is completed, we are supposed to comply with the post-registration part, wherein we are supposed to report all our procurement and sales data, EPR fulfillment and plan of action. Annual return filing due dates generally are 30th June, but these were extended to 30th September this time. For collection agents and recyclers, it is quarterly return filing. producer registration. So while getting registered as producer, we are supposed to fill these 5 tabs, which are general details, type of producer, procurement data, sales data, and declaration. While take you ahead in detail in the further slides. So the registration fees for the producers range from 25,000 to 10 lakhs basis the sale of base oil and lubrication. These are the this is the tab of general details wherein we are supposed to fill all the basic details of the company, name of the company, trade, GST, CIN, IEC certificates, CIN certificate, and etc. Then we are having type of producer wherein we are supposed to choose select the type of producer we fall into. So there are these codes. P1 stands for a producer who is involved in manufacturing of base oils at production facility and sells manufactured base oil in the market. P2 is a producer who is involved in import of base oil. P3 is a producer who is involved in manufacturing of base oils at production facility and sells lubrication oil manufactured from base oil under its own brand name or with co-brand name. P4 is a producer who is involved in import of lubrication oil. P5 stands for a producer who procures base oil domestically and sells base oil and products derived from base oil under its own brand name or co-brand name. P6 is a producer who procures lubrication domestically and sells under its own brand name or co-brand name. P7 is a producer who procures base oil domestically and sells lubrication oil manufactured from base oil under its brand name or co-brand name. P8 is a producer who procures re-refined or recycled base oil domestically and sells lubrication oil manufactured from re-refined or based oil under its name or again a co-brand name. P9 is a producer who's involved in manufacturing of re-refined recycled base oil and re-refined recycled base oil under its own brand name or co-brand name. Then we are having these basic details of the production facility to be uploaded. Then we are supposed to upload the procurement data, wherein we are supposed to upload it at oil level quantity being produced, being procured, and quantity being imported. Uh, Further, we are also supposed to upload the CA certificate specifically of procurement data. Then we are supposed to report our sales data at oil level. So there are 16 different oils. And if we are having any other oil which are not mentioned in the above oils, we can mention it in the tab others. We are supposed to mention the total domestically sold quantum here. Further, that is to be bifurcated into 3 different producers, which is the producers who are making products and selling with their own brand name. Second type is the producers who are selling directly with their brand name and producers who are doing co-branding. And the last part is our end users. Now then we are supposed to mention the residual oil generation. If the specific oil is having its residual value, we are supposed to mention yes. If not, then no. Then we are supposed to mention the operational loss, the percentage of operational loss. On operational loss is a percentage on which the target would be get calculated. Then we are having a qualified quantity of the target here, and then the tentative target. Similarly, we are supposed to upload the CA certificate for sales data. Here we are having the part declaration where we are supposed to upload an undertaking on the letterhead of the company and then the payment details. So this is the whole procedure for producer registration. Then once the registration is been approved, we are supposed to follow our post-registration compliances, wherein the annual processing fees is 25% of the application fees. Um, then for post-registration, we are supposed to upload the procurement and the sales data similar to the registration part. Then there is a target being generated, tentative target, adjusted target, and final target. Then there is a EPR tab where there is this entry for the credits which are being shown into our portal. The EPR credit certificate would be shown here. The details which would be mentioned are details of the recycler, date of the receipt of transfer, total value of the certificate in metric ton and kgs, transfer ID and action. So here we are having a tab known as Verify, wherein we are supposed to click on it and an OTP would be initiated, which would be received at recycler's end. After inputting the OTP, the credits would be transferred to our account. Uh, in a case where this OTP has not been initiated in 7 days, the certificate will be sent back to the recycler's account. Yes, so this is the post-registration part. Thank you.
Thank you so much, Pooja, for covering the entire registration process and the post-registration process in so much of detail. 16 kinds of oils and 9 kind of producers, quarterly returns, annual returns. This framework is becoming more complicated by every coming day and by every update. Like you, if you remember, target adjustment mechanism, which was discussed by Ipsita. So all of these compliances are quite complicated, and I hope this detail and the way our speakers have explained everything to you has helped you out. Now, if any of you have any questions or any doubts or any queries, you can put them in the Q&A section. And while you have the time to put the questions in the Q&A section, or there are details to reach out to our team in the chat box, wherein you can drop us an email or you can directly reach out to us using the contact number. So now, while you guys can put your questions for the webinar and any doubts and queries that you have, I will invite Ms. Ipsita to give a little brief on our services that we are offering under the EPR and other company introductions. So yeah, over to you, Ipsita.
Thank you, Arushi, and thank you, Pooja, for taking us through, all the requirements of the portal in detail. At A A Garg Co, we have been handling, various services, assisting our clients across all the 9 streams of EPR that are, regulated. We are proud to be recognized as India's subject matter experts for EPR with over 7 years of domain expertise. We have completed more than 300 registrations and filed more than 600 annual returns and saved our clients more than 90 million rupees. Beyond compliances, we support with regulatory updates, representations, and a 3-tier approach to EPR fulfillment. Our goal is simple: to make EPR compliance easier, smarter, and more impactful for every client we work with. Well, so our work has been diverse across industries such as FMCG, automotive, oil and lubricants, packaging, pharma, electronics, batteries, e-commerce, textiles, paints and chemicals, and food and beverages. Our expertise lies in simplifying regulatory complexities and enabling organizations to meet their compliance goals seamlessly. Well, this is about us. Now we welcome your questions.
Yes.
Thank you,
And
Ipsita.
Arushi, if I can take a minute, for
Yes,
thanking everybody, and then you can start with the Q&A. So
sure, sure.
thank you everyone for joining in today and taking out time to, go through. And thank you to the team who have put together all the informations and all the updates so that the attendees can understand and they can very well benefit out of it. Thank you for that, team, and thank you, attendees, to sharing your time. And we will be very happy to start. And Arushi will start the Q&A. But what we wanted to share that whatever the queries you have, whatever the issues you are facing, feel free to reach out to us. And we are trying to provide one-stop solution to the companies. I know the lubrication oil industry are being impacted with multiple EPR like plastic, because plastic packaging is another a critical application to them. The used oil is another critical application which has started. It is highly complex because the industry supply chain and industry ecosystem is also built is little complex because of the co-producer, co-manufacturing, co-branding. So it becomes very imperative for the data. And more than the target numbers, the data you are reporting are very important. So be conscious of those things more than the costs, more than the what is going to impact, because the data is important. The right data will be important for your genuine target, because what we have seen over the years that people face a lot of issue when they don't invest in the data and the right thing, and they go in the prices, and they end up getting into a wrong target. I would not say high or low, they wrong target, and because of which they get into a lot of issues. So get invest time there, and that is where the main thing lies, because of the target adjustment is also active now. So thank you so much for hearing that out, and I hope this session was good. Arushi, let's start the Q&A.
Thank you for the brief, explanation, Abhishek sir. And thank you so much for all of you to join us in. Thank you to the speakers, and thank you to all the attendees for joining the webinar. So have a good day. Thank you so much.